Hey everybody, this is John and welcome to the free video. And so I had a lot of questions today on the point of control chart. Like what is it? What does it do? Why is it important? It's very easy to make this very complicated very quickly. So here's the easy way to do it. Think of this as the weekly point of control. This is the daily point of control. Okay, what is the point of control? It's just related to where all the volume is. You know, sometimes like you'll see a market rally and nothing really happens there. Nobody's interested. Nobody's buying. Nobody's selling. It's not that interesting. Okay, and in the lack of liquidity, then we go. So think of this: it is the markets are a heat-sinking missile looking for liquidity, and it's like, and then they get down here, and it's like, oh my gosh, look at all the volume here. Okay, and they get, then they'll kind of come down here, and it's like, oh, no volume. So where do we go? Let's go back and look for the so it kind of knows where the liquidity is, and it's like a magnet. You get too far away up here, it comes back. You get too far away to the downside, it comes back. And this is important because a lot of times, especially on a day like this, and the market's like, oh my God, the market's coming, the world's coming to an end. It's falling, it's falling. Look at the volume dry up. Okay, nobody cares that this is falling. This is just a stop run, and then we come back up to the point of control. So it's a very, very useful tool just to kind of stay on the right side of the market, okay, and not get too carried away. From there, if we come and look at the NASDAQ here on a daily chart, we can see absolutely that we are just doing absolutely nothing. We've got obviously a peaceful transfer of power happening on Friday, and we've got monthly expiration. I'm anticipating things are going to continue to be a little bit on the quiet side. There are some danger signs I'll talk a little bit more about in the premium video. The skew is very high, okay? It's actually bearish, but the put-call ratio is telling a slightly different story. It's a little bullish. Carolyn's got timing for highs, right? So we've got some conflicting signals in this market, but there's also a lot of angst and uncertainty that's coming up with, look tomorrow on the inauguration. So that's what we're looking at. One of the things that I'm going to be watching is the bond market. At this point, if the bond market is going down, that's essentially a vote of confidence from the smartest money in the world that inflation is rearing its head because it's anticipating a pickup in economic growth. Okay, and ultimately, of course, that's good for everybody, at least in the short term. The long term will tell a different story. So that's what we got. You guys have a great night, and we'll see you at the next update.